Welcome to the Millionaire Logistics channel. So here on this content, guys, we're still going to be sharing with you a back test of our strategy, right, for day trading. And we're going to be sharing our analysis also for the coming week as we see the market, right? So guys, if you love the idea, don't forget to subscribe to the channel, hit the like button as we trade Forex with Millionaire Logistics. So here, guys, we're on the same chart, pound USD, and we're on the 15 minutes chart, right? And in this particular content, guys, we're going to be sharing with you our forex trading strategy, guys, using what supply and demand, simple trade sections, trading sections, psychology, right? And then we'll also be using the Fibonacci retracement tool, right, to show you how the market has performed for quite some time. And then we personally, on my Facebook story page on how I missed the market. Actually, I didn't take any trade for this week, like holding a trade, but I did trade on Thursday. So on Thursday market was quite cool, about just 40 something pips or thereabout. And today, guys, gone off September, right? And because of the NFP trading, guys, NFP reports, all right, which we're still going to be discussing in the content, okay? I actually did not take any trade today. I was just busy on the fundamentals, right? And from the fundamental perspective, guys, pound USD may still be enjoying some bearish move. However, guys, as seen on the chart here, we should expect some retracement. We should expect some retracement to perhaps this point or even higher before the market will start going down. Why? Fundamentally, guys, the USD NFP report, right, coming in from the US shows that numbers are still high, right? Though there are lower number of jobs added, because the data that shows here shows that we had previous NFP numbers, non-farm payroll numbers, to be at 526k. There's quite a review between last month, between the report for July and August, right? So the previous data we had and we analyzed was that 526 more jobs were added. So that is kind of the previous right now, because the fundamentalist economists forecasted the numbers to be 300k more, like 300,000 more jobs that will be added to the US economy in the non-farm payroll sector. However, guys, actually 315,000 jobs were added, right? So that shows that the job numbers that were actually added was more than the forecast, right? So that shows that the USD is still quite strong comparatively from the fundamental standpoint, okay? Now, technically, guys, let's see what we have on the daily chart. On the daily chart here, guys, looking at the market, obviously, we're still what? We're still bearish, right? Obviously, we're still bearish. After this price imbalance here, the market here still shows bearish. And guys, if we go up to the weekly chart, we're still bearish, rejecting off close to this the exponential moving average 20. You can see price making this bearish, all bearish week momentum to the downside. Okay, so because we're actually scaling this particular strategy and this particular concept of trading for day traders and intraday, trading, scalping, and day trading, our moves, which we've also been trading for quite some time, right? And also keeping our notes and sharing our content as we explore that idea. We actually will be scaling on using the 4 hour, right? 4 hour and the 15 minutes, okay? So if we look at the chart right here, guys, we've explained this a couple number of times. We have here our period separators. I can as well do away with this, the moving average here, okay? So we have this, okay. So we have almost a naked chart here, right? This is quite naked. And we just have our period separators from 31st. You can see how the market period separator, this from this point to this point, as always, guys, represents 1 day of price action, and from this point to this point, 1 day of price action, as you can see here. So the idea of this content, guys, is actually to backtest that same strategy that we have been sharing for at least a month now, okay? So guys, if you love the idea, guys, don't forget to use the playlist. There's a forex strategy and education playlist in the channel there, and you'll as well see how we've used this concept to actually learn one or two things from the market and to show you guys, as subscribers and viewers, how we have been using this concept to trade and understand the market just for day trading, okay, not for swings or position trading, just for day trading, right? Scalping with precision, okay. Now we also go around this content, we also go around this, we'll go around this idea, and we'll also target with our previous contents and all in the series, okay. Now we have here from the 18th 17th of August, okay, we'll be doing a back test from the 29th, because I think that was where we stopped. So we'll be doing a back test from the 29th of August, okay. 29th, okay. So here we are, 29. Very crazy. Now guys, now remember guys, for this concept, for this trading, we want to take cognizance of three major things, right? I want to take cognizance of three major things. First off, we want to know the day. We want to have the period, this period line here, this period separator here, to show that we're dealing with this day, and we're also dealing with the price action of the previous day, okay. Now seeing this move here from the previous day, we have one reference first, right? Seeing here that what we can see here is that this day ended very much bearish, though it started right, it started bullish, right? It started bullish here, and then started bullish here, you know, and the price actually went up. But within this 17 here, it's actually 5 p.m. So this 17:00 is 5 p.m. on the chart, right? While in real time is what is 3 p.m. So within this period here, there's a New York session, and the New York session actually started, and the market went what, bearish, right? The market went bearish. So what we want to do first for this day is to use our Fibonacci of the previous day to go from the highest to the lowest. Simple one. From the highest of the day, the peak, right, to the lowest of the day, which is here. From the highest of that day to the lowest. And then we want to see the market, we want to see a reaction back into where, into any of these levels. Now if we come here to the current day where we now have one reference, should in case maybe from this point right here, which is the lowest, which is right here, right, and we happen to have seen price consolidate on a new day, consolidate around here, and perhaps come back to maybe 38 fib level or 50 fib level, you know, within that time, right. Now we also want to match it with the trading session of the day. Remember guys, we have three major trading sessions, right? We have the Asian session, which typically starts by when it opens the day, typically from like 12 a.m. Nigerian time and it ends by 9 a.m. in the morning, right? On the chart here you see 00 to about 11, right? On the chart time 11, that's what you see, but in real time it's 9 a.m. as we explained that the chart time is actually 2 hours of RA time, at least from the experience I've had on the chart, you know. So we also want to know the trading sessions as I've earlier mentioned, right? The Tokyo session, the London session, which starts by 8 a.m. and ends by 5 p.m. in the evening, right? And the New York session, which typically starts by 1 p.m. and then ends by 11:59 p.m., right? Now within these sections guys, as we've earlier discussed, we have trading overlap. That is, there's a time when there's an overlap between the two markets, right? Between two markets, majorly between two trading sessions, right? So the one for Tokyo and London session is actually a trading time between 8 a.m. when the London session opens, and then 9 a.m. when the Tokyo session opens, when the Tokyo session ends. So that means that within 8 a.m. and 9 a.m. two trading sessions are actually open and active, and that could present some trading opportunities in the market. However, personally, sometimes if I find a very good position there, I take the risk, but typically I want to be trading the London session and the New York session. That's when the London session is very much open, and then when the New York session is also open. So now how I look at the chart then is the activity that the London session actually prints on the chart. If there's a break of structure, a change of character within in the London section, I use my fib level to set some parameters, understand the technical analysis, and then at the opening of the New York session, I hunt the market to find a possible entry. That's what I personally do, right, on the chart. However, guys, we'll also be backtesting this. We'll also be backtesting this simple strategy on the chart just in the moment, right? So another thing we want to find out, another thing we also want to trade with is what the change in market structure and change in market sentiments within that trading sessions, within the trading sessions. Okay, now if we look at this chart, one thing we'll notice is we were using this here, the highest point and what the lowest point of this day, to find an entry for the next day. However, guys, as you see in the market, what happened was that at the beginning of that new day, the price went what? The price went lower, right? The price went lower. And if you check the time, this is from this point, we have the Tokyo section, and then right here, the London session starts. London session opens at what? 8 a.m. Okay, and then what do we see? We find this move. We see this kind of moves up to this point, and the market gets to this particular level and does not, you see how it practically did not get to any of these levels in the midterm. However, guys, if you see, you see that that was missed, right? So we didn't get any confluence with this particular fib level that we used. However, guys, this is not the only reference point we also use, because this is just for one case scenario. Now, in particular, scalping, when we want to scalp, we leave that and look intra-day, right? We go further downwards to what the market is doing at that particular time, okay? Now, let's see what we have. This was the one we actually looked at, right? Okay, so from 29 here, right, this is what we have here, okay? 29, we didn't get that move, so let's look closely into the market, okay? Let's look closely and see if we can find something. Now, like we have here, all by this time, personally, I'll be asleep, so I really don't want to know what happened around here. So this is the time I'll actually be looking at the market. By 9:30, 9:15, around then, which is typically 7 a.m., 7:45 Nigerian time, okay? Now, this was kind of the open, okay? This was the open, and then the price came downwards. And now, this is what I want to do. I want to use my fib level. Seeing this move first off, I want to use, still with bearing in mind that, oh, this price could actually come down, I want to go to the time here. Now, why here, guys? Now, if you look at this chart, you can see this is 8. The price actually formed a low here. The price actually formed what? A low here. If you look at this, if you want to use Wyckoff, you could actually spot this little structures here as well as your selling climax, as your whatever you want to call it, as your testing secondary test, as your and you see this structure here, and this particular structure, this one, you see a higher a low here, and then a lower low, and then you also see a lower a higher low. Okay, now seeing these moves, these little moves here, this was where I would have started hunting the market. Around here, this is the time. This is 8 a.m. okay. Now, some persons may find this not tradable, but as a rule, I'm expecting price to actually reach here to react 38 level, 38.0 fib level, and if it doesn't, I'm also expecting the price to react here, and I'm also expecting the price to react at 61.8 and then 79 to react here. So within this time frame, one can actually take the risk of going for a buy to either of these retracement levels before price could find its way to the downside, right? Before price could what find its way to the downside. Now, this is very logical and this is very interesting. However, guys, stay glued to the channel, subscribe to the channel, because we're also trading with our own tool that we developed to highlight these things on the chart automatically and make it easy for those who actually are viewers of our channel and are subscribed to the family, right? Though you may need to apply it on your PC, and guys, it's for free. It's for free. And by the time we start using our PC to share content as we used to, you're all going to see how this works on the chart, and we're going to be using it more often for live trading and live sessions and all that, and we trade together. You're also going to be seeing how the MLX IVT works, and that is for free. Like, should you want to share the tool that we developed and we use to guide our analysis, is all for free. Okay, now let's go back to what we have here, guys. So from this point here, we can also see that there was a kind of push expecting this price to get here, and we can also see, what can we also see on the chart? We see minor structures. You see this particular one broken here. This is the 10 a.m. typically is like 8 a.m. in real time, and you can see this structure being broken here, this resistance level taken out by this particular move. So we have an internal structure against the upside. Now we have two confluences here, right? From this point to from the opening of the day, the highest point of the day that we can see before the London session, right? We expect a retracement move from that time, from here to where, to at least, it's very close to the 38. We expect a retracement move to where 50, 61, 60, and 79. You can see how well price reacted at this level at 61. You can see this reaction, and then the price broke here. You can see another reaction somewhere around the 79, right? And then price got to the 100, and very much price did not really break through per se, but then that's what it is. Okay, so studying the internal structure, guys, here's what we can make out. Here's what we can make out. Looking at the internal structure, okay, you see this break of this structure, right? And then there was a, now looking at the time first, let's look at the time. This is 10, right? So from this point, 8 a.m., we have what? We have the London section, right, starting. And then at this point, we have the end of the Tokyo session. Okay, so all here happens to be the London trading session alone, right? Now, using this same tool, this is what you can also get structures. Now, you see this here, a what? A higher high, a high, right? This is, let's say, is a low. We have a higher high, we have a higher low, right? Because this higher high was taken out, and you have what? Another higher high, and then you see price coming to where the 38 level, and then moving to the upside. So that's what it is on the chart right here. So at this point, guys, we see the price reacting around the 38.0, and then we see there's a scalping opportunity here at this level. And right now, seeing this also, we can also see some price imbalance, impulsive move to the upside, with the expectation that what the price will still come to this level and react further to the upside. However, that doesn't really happen all the time, so it's a risk, right? It's a risk. So now we have established that, yeah, the market will seeing what happened on the 29th. Now looking at the next day being on the 30th, right? Looking at this chart, what will be your guess? Okay, now seeing that this price went from where? From where a low here to higher high, a higher low, a higher high at this point here, right? Higher low and a higher high here, right? Higher low and then a higher high, and then this was kind of a break of this low, but this low hasn't been taken out yet, so we're of the assumption that this market could still be on the upside. But then getting to this point, guys, you can see price making a lower high. However, this was kind of the close of the market session. We already have a high here, so showing that this was a kind of lower market structure, making highs and lows, right? But this is the flow of the market for some time. Remember, guys, we have this level to also watch, this fib level, right? This fib level to watch, this trading range, because we've not gotten any feel of this level. So this could actually be a point to refer, right? We've not gotten any tradable range for off this level. So I'll just use an arrow here to leave a sketch of what we could expect either at these levels. Let me use the 38 first as a reminder, or the 50. So if we get to either of these levels, we should actually be watching for some reactions. Okay, now seeing the market flow, guys, seeing the market flow at this level, I simply want to use this same Fibonacci tool to get some relative potential opportunities. Okay, now we're taking from where the market flow is to the upside, and we're taking from the upside to where the highest point that the price got to, which is here, and we're watching the market again to see where it reacts, right? This might not be too perfect. Okay, we have something. Okay, now going to the next day, since this flow was onto the upside, this is what we could find. Now this is the new day. Okay, now market starts this way. Market comes by 4:30, which is 2:30 a.m. still very early, and you can see price here reacting, showing some rejections on the 50 level, between 50 and the 61.8 fib level, and you can see how price reacted around here. And then at the 8 a.m. when the market 8 a.m. this is exactly 8 a.m. 8 a.m. you can see price around here, and you get this a very much impulsive move. So maybe if we're seeing this in the market, we could actually take this opportunity off the 38 level, right? Seeing this. Why? Because if you also look right here, the market is close to a clustered zone around here, levels here, and you can see much clusters around here too, and a small break above it, and a slight retest by just 2 candles within 30 minutes. And then this could actually be a risk. However, yes, a risk to get off this move. However, I would have been setting my target at where? At the 0.27. But because we have this reference zone here for the reaction of this range, this particular range right here, this price range, within this level, you can see all bearish moves to the downside, breaking the structure, and then a new day here. So this makes a tradable range. But before all this, guys, remember that we've already established a fundamental idea that pound USD is on the bearish side because of the NFP reports that we have and the overall trend of the market. So the idea of this particular trading strategy, guys, remains finding intraday trading opportunities using time of the day one, that's the trading sessions, and then also using the Fibonacci tool to get some potential entries for your trade, right? Now, and that will be all for that day. And looking at the market, if I should take the fib level off, right? Looking at the market, guys, after the price reacted here, we saw the rest of the day coming to the downside ultimately. This same thing has happened here, right? And this particular day, guys, it broke the low of the day, and that's usually the beginning of a very good downtrend. All right, now at this point, guys, seeing this structure, guys, to trade this next day, we have two things in mind. The same thing, use the range, right? The high of the last day, the highest point, and then the lowest point, and we extend, right? Okay, and we have here the highest point of the day. Okay, now if this is cool enough, when we come down, this is what you find. Now this is the new trading day, and you can see price around this 38 level, between 38 and 50, and we're looking at where the time. And when we look at the time here, what do we get? This is 8, 9. This is where I'll be looking at the market. And by 10 a.m., 10, which is typically the 8 a.m. in real time, and we have this trading opportunity to at least this level 1, and then if market allows this level, I don't really get to the minus 0.68 level for scalping or intraday trading, right? Now, getting to this point, you can see how the market reacted alongside. Now, also looking into the daily perspective, let me take this off. Looking into the daily perspective, guys, within this range, we see price clusters around here showing massive rejection. First of all, the market opened here and then came down here, right? And there was really not much happening in the market around this time. So the major time that we had this move was somewhere around here, the beginning of the London session, okay? That was where we had this massive rally to the downside. Massive rally to the downside. We had this massive rally to the downside, breaking what this close and breaking what this, the previous low of the day, now signifying what a downward trend as we earlier established. Okay, now the same thing, if we try something and we use our fib level from that high and we place it here, we'll see some rejections and see how it works. Right now, why did we use this? Why did we use this particular move? Why did we take this as reference? Well, seeing this move right here, we see that this previous day low, you see price reacting around here. Now, coming down here, what we see is that this price level has been taken off totally right here. And then also the opening of the day, we can see what? Very full bearish candles making it move to the downside. And this can only happen by what? Institutions getting involved in the market. Okay. Now, taking this as reference, the two things. Remember first, guys, we use our Fibonacci level to place between the first high, the previous day's high and low, right? And we had a reference point around here, the price area to watch for the next day, okay? And then we see how it reacted. And then we're also using intraday confirmations too. And seeing this particular level, maybe we missed the first move. We can as well take advantage of the retracement move. That's what I mean. Now, if we come here, this move extended till about where? The New York session, where the New York session starts around this level, right? Around here. And then we start seeing rejections. We start seeing kind of price consolidations around this level, and this could actually be an opportunity to enter the market for a very short-term profit around the 38 level and the 50 level, sometimes 61.8 level, right? But then for this kind of move, retracement moves, I don't take profits exceeding the 79.0 fib level, right? Very important. I don't take that. So maybe, and you know very much that you'll actually have to be watching the chart at least with 5 minutes to 10 minutes interval or less. Okay, so but typically we have seen how the market has been a downtrend, and we're taking advantage of sell opportunities mostly in the market and entries, right? And then that would be all for that day. And then if we look at this next day, this should be on the first. The Thursday, this was the market I traded, guys, right? Because I didn't really look at the market Monday, Tuesday, Wednesday. I was kind of busy, so I promised myself that I was going to trade the market on a Thursday. Okay, and this was a very typical sweet result. Now, using just that same approach, guys, the fundamental perspective of the market, that the market is still bearish, right? And I know very much that the following Friday will be the NFP Friday, and NFP reports will be released. Also, I also had in mind that Thursdays are usually volatile times in the market. Okay, so with all that in mind, guys, I decided to see if I can see some opportunities in the market to trade, and I actually did that. And here, guys, this is the kind of move I saw from the market, and it's kind of interesting, guys, and I also want to share that with you, because hopefully you find some patterns on how I just take simple trades and trade with very simple concepts that obviously anyone can relate to, and it can also help to in swing trading, and that basically just by using the Fibonacci trading tool, understanding the trading sessions, different trading sessions, and um, simple market structure too. Okay, now this is the market that I traded, and then I just use that same simple information, the same simple information of what of highest point and the lowest point of the previous day. Okay, this was the highest point and this was the lowest point, and then I extended it. That's my first reference. Okay, now previously, we see the market going lower because this day structure has been broken by this day structure, and then we don't know where this will be heading, but then we hope that it becomes nice. But then, as you can see, what happened here, guys, quite funny. So the market actually came lower. The next day it came lower, right, and then went to the upside. So by it coming lower, definitely we want to adjust this to this point before the London session. Okay, now this is still the Tokyo session, guys, and London session must have been around here. You see price heading to the 38.0 level. Now, seeing these huge rejection candles within this time frame, this is an opportunity. And this was where I entered the trade. I actually waited for a long time to confirm all this, and I entered the trade here, and I got off the market here, somewhere around here though. A very simple trade, and I left the market, right? Leaving the market here, I think somewhere around here too, I entered a retracement move, which I'm going to show right here on the chart. Okay, right here on the chart, because this was the exact thing I applied. Seeing this rejection, okay, seeing this move here around this time, and I saw this particular move to the upside, I took the risk of taking the market here and also taking some profit here, for although that trade got into Friday morning, but then it was a very reasonable risk owing to the fact that I've made some profit from this particular move here. So I just had to take just a retracement move, but then I know those key levels, those key things. This was still within just the New York session, the New York trading session, right? And the close of the London session. So I was typically expecting a retracement move to the upside, and I set the 38.0 as reference, first take profit, and then the 50.0 should the price get here. So somehow I was watching the market and I saw price got up to this level, and confidently I held the trade to close at the 50.0 fib level. Okay, so now looking at it, let's see if we can find some other clue to this particular market, guys. Okay, let me take this off. Now, looking at this particular day, guys, what can we figure out, or what can we decipher? It's quite cool. The market actually started here, right? It came down, showing some form of movement, retracement, showing this particular, you can see indecision candles, indecision here, marking lower structures, smaller structures rather, and then price still goes to the upside, but not breaking above this open, right? And then at this particular time, guys, the same thing, we see what the price comes downwards and breaks this structure right here, this support level. So at this point, guys, one can also choose to use the fib level and draw a very simple structure right here, showing this retracement level from this point to this point. And you can see very much that if we actually see this price action pattern to be relevant, because this is what this formation here could be seen as what a morning star. But if you see it to be relevant, guys, you can see that price broke the 38.0 level, but then after it came down here, it's rejected the 38.0 level. So all here, guys, you can see market rejecting this level. This is actually a cool one to actually take the risk at about this is 2:15, 2 hours later, 2:15, which is probably the New York session. Okay, now at this point, guys, you can see some reasonable opportunity to take the market from here to here and mostly here. Simple, right? So guys, don't forget, guys, if you're enjoying this, don't forget to subscribe to the channel, don't forget to hit the like button, and don't forget to comment, guys. It's okay for you to give us a thumbs up. It's also okay for you to share this content if you want to your friends to see this simple trading concept using just what the Fibonacci tool, simple market structure, and of course the market sessions, trading sections. Yeah. So and then we have the D-Day. So we have here, we've established that this is still bearish, and we have what today, which happens to be Friday, and which happens to be what the NFP reports day, right? And the data was released, guys, as we earlier said. Okay, now what the NFP means is very basic. The non-farm payroll includes data of job numbers that was added to the US economy, aside farming jobs and jobs in private sectors. Okay, now from the adjusted reports for last month, that's August, August actual readings figures was reviewed, right? And there was some additional numbers. So we have here the previous number of jobs that was added to be 526,000 jobs, right? That's what was added. So economics and fundamentalists, right, from the US economy forecasted 300,000 more jobs to be added to the economy. However, guys, when the news report, when the release was out, it showed that 315,000 more jobs was added to the US economy. So that shows growth. That shows growth more growth in the US economy, because since economists and fundamentalists were projecting 300,000 number of jobs, but then they were met by surprise, and in fact 315,000 more job numbers was added. So ideally that would indicate that the US dollar is still strong compared to what it was anticipated to be. So right now, looking at the fundamentals too, on the bright side of things, all things being equal, the British economy is not really doing that great, right? Owing to the fact still commodity prices and gas prices and all, and hikes and all that, rate cost. So I will still want to take my risk on going short on the pound USA. However, guys, for this concept, we should bear in mind that for just this particular concept of trading, we should bear in mind that we're not just trading off a swing term based analysis, but we're also taking advantage of little moves during the day. So at the level where the market is right now, I'll be expecting some retracement moves to the upside. Ideally. By what? By simply using my fib level and to this day. So at least I want to see this price get to 38.0 level, or 50.0 level, or 61, in most cases 79, and then paired with the same concepts of trading sessions and all, I will then find opportunities to go short or go long, as the case may be. Go long for retracement moves, go short for trading in the direction of what the trend, right? So but guys, let's do some little thing. Let's analyze this market a little, because this is very tricky. The NFP reports should have been announced somewhere around here. This was, yeah, somewhere around here. This move here is a result of the news, after effect, and then moves here. But then looking at it kindly, this was where the market opened, started here slipping, and around here it moved to the upside, right? 9:30, 10, moved to the upside. Okay, now looking at the previous day, we have a highest point here, right? And we also have what the lowest point to be here, right? The highest point here, highest price here. Cool. Okay, doesn't have to be too perfect. Highest point here, and then we have the lowest point here. Okay, and on this new day, guys, this is what we see. Is this wrong? No, this is not cool. We're going from upside to downside. Okay, now interestingly, guys, this is where it starts. Okay, now we have a reference point around here. We see reactions. We also have a reference point around here. We see reactions, and then we have points around here, 61. If we see reactions, and then finally the 79. So this is actually a reference. Now, if you look closely, guys, you can see how price reacted around these levels too as well. When it got to 50, you can see this move obeying it, and then it broke to the upside a little bit, and when it got to 61, you can see this massive rejection, and the price actually did not do much around here until finally it dropped before getting to 79.0. Okay, so these are reference points, these are reference levels on the chart. As you can see, after the price reached the 38 level, there wasn't much. It pretty much traded all these areas, guys. Needless to say, I don't trade around here personally, so I'm just sharing this concept based on what I trade and what I look for in the market for intraday trading. And guys, if you've noticed, guys, we've actually been backtesting and for testing this for sometimes because we have the intention of sharing it with every trader around there that comes across our content, and every trader who likes the idea, you can as well take advantage of this or add it to hone your own trading skills, analysis, and results. Yeah, so leaving this reference, you can see how the price reacted around these levels. That's just a reference. Now going further to just the day of the trade, now that's a very different ball game, bro. Very much similar. All right, now we have this move. We have this, seeing this move here, 9:30, seeing this move that took out this level and this level. Guys, I don't really want to think much of this, but I'll see this move to be what, like price trying to make an uptrend to that level. Why? Because this, perhaps this day, you can see that the market is quite active because it's very much close to what, 10 a.m. to what, 10 a.m., which is typically 8 a.m., the beginning of the the London session, right? And seeing that this level was taken out, this swing high here was taken out, Banda swing high, right? So we're expecting, typically I'll be expecting a retracement for me to buy. Why? Seeing this particular candle here, this is what we call as what the item here as origin of price, because all we can see here is a bullish move, bullish candles to the upside, aggressive bullish move to the upside. So we build the theory that yes, institutions are trying to buy this price, and this is the first line of attack. This is the first line of action here that was taken. Okay, so I typically use this same tool and to the origin of price, and then where I place it here. Don't think about it, I just don't think about this, and I place it quite here, very much where we're looking at an evening star candle formation here, price action, and then see price coming back to where the 50.0 level, right? 50.0 level, close to the 61, still within time, right? Still within time. This is 10 a.m. typically, London trading session, and then we can see this. If you scale to lower time frame, which I wouldn't do right here, but if you scale to a lower time frame, you find some other entries and all to take advantage of this trade. And then at here, you can see how price went straight to the minus 0.27 take profit level, clean, before it formed a kind of, all this formation here. This is more like, okay, under shooting star too, but this is a doji. Yeah, this is a doji, a long leg doji. Okay, now or a gray stone doji rather. This is a gray stone doji. This particular candlestick pattern here, a gray stone doji. Okay, now seeing right here, the price rejected straight up. After one must have seen this trade, taking the profit, the price came downwards. Price still did not break this level, this zone, this price range. We have here, I personally do call here origin of price. Okay, but the price here, price did not break this level, though, as you can see here, and where it still went to the upside till where the NFP, and we see this particular move to where we have it right here. Okay, now there are very few things that we can do in this kind of cases, because definitely the market will want to react differently or adjust because of the data and the news that will be impacting and having lots of impact in the market. Okay, but then you can see how we've taken some profit for that day at least, right, using this same strategy and concept. Okay, now from this point, guys, this is the NFP move. Nobody definitely would see this. However, if you want to use time of trade, you can see how maybe like we can see here to be another one, though this was not clear enough, though you have bullish candles to the upside, expecting price to react, this origin of price, because it also broke this level in a kind of way, expecting price to react to the 38, which it did, the 50 or the 60 fib level. But breaking here, price broke this structure, broke the low of the day. Let me remove this fib level so that we could have cleaner charts. Okay, so what I want to expect to see in this market is this. I want to see high and low, right? Highest point to price and lowest point. So I want to see on Monday, I want to see price, maybe price could come down here, but I want to see price whichever way get to either of these levels, the 38.0, the 50.0, and then the 61, 69.0, 61.8 level at least, guys. Okay, so guys, don't forget, okay, if you're enjoying this analysis, remember guys, recall from the major highlights, things I shared on this and this particular content, guys, we're still on how to trade with the Fibonacci trading tool using the retracement concept, and how to trade with what the trading sessions, right, to day trade and scalp, get some scalping opportunities and intraday trading opportunities from the market. And we're still using supply and demand zones, however, guys, but somehow it's not that obvious, because right here we're dealing with, we're using market structure and all that, breaking minor structures, because we want to simplify it for everyone to grasp the concept and benefit one or two things from it. Okay, so guys, don't forget, guys, to like the channel, don't forget to subscribe to the channel rather, don't forget to like the content, and don't forget to share your thoughts in the comment section. Okay, so it's Precious Millionaire Logistics. If you guys enjoyed this, keep sharing, keep liking, keep referring. Okay, so looking at this, guys, for the next week, guys, not to forget, we're still bearish on the pound USD. However, price may actually get to those levels that we've highlighted. Okay, those levels that we've highlighted, as for the pound USD, and we expect similar things to happen in the Euro USD chart and Euro USD, Pound USD, Odd USD as well. Although, guys, Odd USD is a commodity pair, but as you hook up to the channel, as you're subscribed to the channel, guys, in no time we'll be sharing other concepts and ideas that we use in trading. Theoretical ideas on what currencies to trade at any particular time. Dear Forex traders, trust you guys benefit from our weekly Forex market analysis, Forex trading strategy, and Forex trading education. Precious Millionaire Logistics. So here again, guys, on this channel, we'll be sharing with you Forex trading strategy using the Fibonacci retracement tool and using the time of the day, right, daily time of the day, and then market structure, of course, right, to get smart money concept entries, smart entries in the market. And we'll be doing this by timing the market, like the trading sessions, right, and actually trading within those sessions for intraday trading perspective. Now, this doesn't change the fact that once in a while, guys, we still share with you our weekly forex market analysis, a trade bias based on the what we see in the market and how we trade. All right. So for this particular content, guys, we're gonna be sharing with you ideas that we've already shared before, and we'll be developing with you that confidence on how we apply these simple tools and trading concept, right, on the chart. So this is more like a forward test approach, right, to the market. So guys, so this is the pound USD chart. Obviously, as you can see, it's still trending downwards. However, guys, we can't really say where the market is headed next, but from sentiments and all, depending on the fundamentals that come in at the first Friday of the next month, okay, which is kind of close, because today, guys, this content is recorded on the 24th. However, you may be seeing it on the 25th or 26th, regardless. So we'll be basing our intraday trading perspective on the 15 minutes chart. So depending on the analysis that comes into the market, guys, the fundamental analysis that comes in for next month, that may affect our bias for the market, and we'll see how the market reacts before we take advantage of the price. But for now, guys, for the intraday perspective, guys, it could be bearish, it could be bullish. So how do we know? We'll find out. All right. Now, this is the 15 minutes chart, guys, and just as we got some entries of the market. Now, guys, bear in mind for the trading sessions, guys, that 4 trading sessions of the day were focusing our mind on 3 major trading sessions: the Asian trading session, the London trading session, and the New York trading session. And for the Asian trading session, guys, which is the Tokyo trading session, we're looking at between 12 a.m. 0.00, which is like 12 a.m. to about 9, right? And 9 here on the chart is what? 11:00, like we've established in our previous contents, okay? And then so from this point where the market starts, right, to basically 11:00 is actually 9 a.m. So this from here to somewhere around here is what our Asian trading session, okay? Why the London trading session starts from what? 8 a.m. So on the chart here, we're looking at 10:00 GMT, right? This is 8 a.m. and it runs through to the afternoon, about 2 p.m. 2 p.m. 4 p.m. rather. And then the New York session we starts by when? By 1 p.m. Okay, so 1 p.m. here will be 15:00. Okay, now this is 1 p.m. okay, so let's see how the market actually played out for the 20. This is 22nd. All right, so for Monday, guys, looking at where the market was coming from, right, we had a bearish sentiment on the overall. All right, now looking at this particular market, this is what we can say or see. Right now, from this early hours, for guys who are in Nigeria, you'll be sleeping by then. Okay, so we'll start looking at the market by, let me see, 7:30 or 7:45. And then right here, this is 8 a.m. So you must have maybe opened your chart and all by this time here, by 8 or 9:45 and thereabout. Now, letting this roll, what we'll notice is this is the high. This right here, this is the high. There was a high formed here, high structure, right? And then the market came to this point first and then showed this momentum to the upside, right? So we're having this point in mind. And what we can see here is that while there was a kind of bullish pattern formed here, the price broke. There was all bearish move, right? Aside this candle, and it came to the downside. So this is where we want to place our risk. Seeing this change in structure, being that this low was taken out and price, drastically moved to this point, we want to use our Fibonacci tool, right? Knowing that price rested at this point for quite some time. Okay, now we simply use our Fibonacci tool to tag where from the highest point, right, of this time towards where we saw that rejection, right? Now when did this happen? Remember guys, this right here, this day by 6:30, which is 4:30 a.m., this was what we saw, and then straight to the Tokyo session, through where? Through the London session rather, the London section, and from here the London section started from this point. So you see this price continuation here, and then price tends to retrace, and at this point guys, this was where we saw this move. The price got to the 79, right, 79 fib level, and where we started seeing these rejections to the downside. Now if you look right here, this is where the New York session must have started. So this period right here, this is the New York session while the London session is still open. So this entire structure here is actually placing some likely scenarios that we can get trading opportunities within the London trading session and where the New York trading session. So the market volatility here and market price action will definitely make much impact in the market, and there will be lots of market volumes, right, injected into the market. And then we see this word 79, price reaching this 79 fib level. Okay, and then you see this move further breaking this particular structure and making it to the downside. So we can, after seeing this move here, there could be an entry here just for scalping. Okay, just for scalping, and then you can take profit at where this minus 0.27, which I like very much for scalping. Okay, so just target the 0.00 and the minus 0.27. Okay, now this for that day. Now if we move on to the next day, what we notice here is quite quaint. Okay, now price made this high first. All right, that's within the early hours being the Tokyo session. Okay, and then at this point here, this is the beginning of the London session. All right, price makes this move to the upside. All right, see this market. Now needless to say that if you had missed this opportunity here, maybe we waited here and we didn't see this, we also notice some kind of significant price change in price structure, right? From here, from this London session, you can see the price going upwards. See these green candles inside moving to the upside, and then price coming here showing rejection, price coming here showing rejection. Now this particular move here is quite sensitive. You see bullish candles, bullish candle, bullish candles, and then an explosive bullish candle before this. So this can actually mean something. And if we see, after seeing this movement here, this level, we can also see some kind of little market structure here. Now this right here, this candle, you can see this candle, this candle, this candle, rejection to the upside, forming a structure after this structure. So what can you say? After price broke, we see this low, what, this particular low here, and then we see what, a higher low, and we also see another higher low here, right? Higher low here, right? So because of these green candles, if we use our Fibonacci tool again to place from the peak here to where either the high of the Tokyo, that's the high of the day of the Tokyo section, right, the open, which is the highest that we're seeing here, or we take it to the end. You can notice something here. If we see how the market reacted, we can see that this first move here came to the 61.8 level, and this came to 50, and this actually stayed above, and before this explosive move to the upside. So this can actually be a reason for us to enter a trade within the London trading session and the New York trading session. Okay, now the most important thing is what I want to hit here. Now looking at here, definitely there are some price clusters here, and we also see an explosive move to the upside here. And guys, remember what we said in our previous content, that when this kind of dynamics or market structure is formed, there are some form of information to exploit. Seeing this market gap here, seeing this price imbalance, explosive rally to the upside, definitely this move here was caused by institutional candles. And what mostly happens is that price comes to at least refill this level, at least half, 50% of it or more, right? Price comes to fulfill, maybe take a second move, retrace back into this price imbalance, right? And feel the move to move either to the upside, or after feeling it, price may change direction. But definitely there is some form of reaction at this level. Okay, now looking further right here, you can see price clusters before the explosive move. So this area here is an area of interest. So what do we do, guys? We take our fib level from the origin of that structure, which is here, the origin of the move. I try to call it origin of price. Okay, place it right here. Now with this in mind, guys, with this, and seeing that the market actually ended here at this point, with this right here, we're expecting the price to at least come back into this area, at least the 61 level, at least. Why? Because we can see some form of at least some liquidity that was here. Why? Because there are price clusters around here, making here a kind of little resistance level, and the structure was actually broken to the upside by this very impulsive move. Okay, so looking at here, we're expecting the price to at least come down to this level, 61.8, or at most this 79, if it were to trade within this price range. And right here, close to this point, guys, we can see some round numbers, definitely somewhere around here. This is the 1720, this price here, where the price reacted to the upside. And if you see this resistance level right here is what 1780 as well. Okay, so with that, with this move, we have an idea of how the next day may be. But going to the intraday perspective, so we have here as a reference 61.8. Now going to the intraday perspective, what can we see? Very cool. Now for here, you see the opening of the day, and we also see this move to the downside almost instantly by 4 p.m. So by the time you're entering the market, we're entering the market by 10 a.m. Seeing this structure, we go by the same bias that we have. No guessing, just the same bias. Price all rally to the downside. We're taking that risk. The high, right? The highest, right? And then we're coming to this point before the trading session. Before what? Before the trading session, okay? Before the London. And when we see the timing, guys, this is exactly where we see the market. The London session opens, right? Opens here. And you can see right here at the 79 region, we start seeing this resistance price resisting this 79 level, and surely that will be an opportunity to risk in the market. And what we see here, followed by what? A move to the downside, 0.00 level, the 0.27 level, which could be a take profit, right? Or for higher risk, you can also target the minus 0.62. All right, and this is exactly the profit that we must have made. All right, now if we're to target this other area, guys, remember we used our Fibonacci tool to target this price imbalance here. This price, we targeted this price imbalance here, and what do we see around here? Just the price did not fill it completely, but we can see this rejection here around just close to this 79 area, and the price actually reacted to the upside. But I feel that this price is kind of making more moves to the downside, although I expect to see a slow market formation on the pound USD till, let me say, next week Friday, when the NFP will be released alongside other fundamentals in the market. So guys, if you like this idea, if you actually love this strategy, don't forget to leave a thumbs up, don't forget to comment. And if you're just coming by this channel for the first time, don't forget to subscribe and follow the Millionaire Logistics, as we do our best to share trading experience and trading strategies and analysis with you.